Good evening to all. So we welcome all of you for this investor analyst meet, and we heartily welcome all of you for this meet. Let me introduce the management team, our top management team here. Our MD CEO Sri Niju Saxena ji here. Our ED Sri Rohit Rishi is here, and shortly that our ED Sri Ashish Pandey is going to join. I am CFO Vijay Sudhato Bank of Maharashtra. Together with me, our GMs are there.
I think one by one, let them all introduce.
Yes. I am Prashant Khandawar. I am Manager Recovery.
Yeah, good afternoon. Myself Arun Kabade, General Manager handling DBZ and CIO.
Yeah, good evening. Dinkar Sangpal, GM Credit Monitoring.
Good evening, one and all present here. I am Suryakant Savan, General Manager Retail Credit.
Good evening all. I am Aparna Zograikar, General Manager Recovery and Legal.
Good evening all. This is Devdutt Rokde. I am General Manager Operations. A very warm welcome to all of you. My name is Dinesh Tambat. I am General Manager Inspection and Audit. Thank you.
Good evening all. I am Chitra Datta, General Manager Agri FI and SLPC.
Good evening everyone. I am Divesh Dinkar, General Manager and Chief Compliance Officer.
Good evening all. I am Manoj Kare. I am GM Mumbai South.
Good evening all. I am Rajesh Singh, General Manager Transaction Monitoring Unit.
Good evening all. I am K. Rajesh Kumar. I am General Manager HR.
Good evening to all. I am Amit Sharma, General Manager Pune City Zone.
Good evening to all. I am Mukesh Chandra Upadhyay, General Manager MSME Credit.
Yeah. Good evening all. I am Dr. Javed Q. Mohanavi, General Manager Corporate Credit.
Good evening all. Myself is Pradeep Shrivastava, Chief Technology Officer.
Good evening to all. I am Subhashish Roy, Chief Risk Officer.
Yeah. So friends, that Bank of Maharashtra, we have been showing a very good result for last 15 quarters, if you see. And this time that we have shown a excellent performance. So I request our MD sir to address you what are our main achievements, what are the milestones we have achieved, sir.
Thank you. So good evening, ladies and gentlemen. First of all, I really express my sincere thanks for you all to have gathered here in such large number. This is not the first and last engagement. We will definitely be in due course always trying to, get connected. We being a Pune headquartered will not be a constraint. We will come down here to talk to you. As and when my quarterly performances we would like to showcase. Even between that, we will be requesting you to come down to listen to us and to maybe review us and report on Bank of Maharashtra is what our request is going to be. I would have loved to have a one-to-one introduction, but this is such a large group. Maybe we will get those opportunities and we will, with more interaction, know each other as well. So let me just start now and just present before you the performance. I'm happy that I am getting this opportunity, indeed my privilege, to present this financial performance in person. So I am pleased to announce that our bank has demonstrated its resilience and agility and has delivered once again a strong set of financial numbers. I am happy to share that we continue to lead in many of the growth parameters, profitability and efficiency ratios. This lead among the scheduled commercial banks includes banks both in the public and the private sector. Because consistently you would have seen that Bank of Maharashtra, maybe at a scale is a little bit this thing, but in the industry we are consistently performing and leading in many of the parameters. So this consistent performance is now maintained for more than 3 years. To be precise, for the past 15 quarters, and going forward we are confident that it would not only be continued but also improved. Our net profit has shown significant growth and is surpassing our projections and reflecting the dedication and hard work of our entire team. Our commitment to prudent risk management and strategic decision making has enabled us to navigate through challenging times while capitalizing on the opportunities for growth. We have maintained a robust balance sheet and healthy capital adequacy ratios, which positions us well for sustainable expansion and innovation in the years to come. While by this time I trust you would have seen the detailed presentation and the various parameters which are of your interest, you would have seen how the bank has done. But let me just quickly share the few highlights of these financial results. So our total business has grown by 15.94% and we closed March at 4.74 lakh crores. Total deposits increased by 15.66 and we closed at 2.7 lakh crores. Gross advances increased by 16.3% to 2,03,000 crores. CD ratio has reached to a comfortable level of 75. There is always a scope for another 4-5 basis points. We can improve our CD ratio. Gross NPA has actually declined sharply and we are happy to share it is now below that number 2. So we are at 1.88%. Net NPA has reduced to 0.2%. Our provision coverage ratio has improved to 98.34%. The OP, the operating profit has grown by 31% to 8,005 for the full year. The net profit has grown by 56% YOY and we have clocked the figure of 4,055. The net interest income has increased by 27% to 9,822 crores for the full year. The NIM has improved to 3.92 as against 3.56% for the previous year. The cost to income ratio has also improved to 37.55 as against 39.14% for the previous year. ROA has improved to 1.5% as against 1.1% for the previous year. ROE has improved to 24% as against 20.38 for the previous year. CRAR as on 31st March stands at 17.38%, of which Tier 1 is 13.72. Our bank has taken several initiatives to build a quality loan portfolio through improved underwriting. We have stipulated minimum benchmark credit scores below which we do not underwrite a loan, and many such criteria have been put in place with an aim to build a healthy loan book. We are also taking steps to manage the stress in the loan book through a robust collection, recovery and follow-up mechanism. For the accounts that would slip to delinquent category despite my close monitoring, we are putting our upgradation efforts, and failing which recovery efforts are initiated immediately. For the underwriting piece, to improve the credit underwriting happening in the bank, for the large and the mid corporate category, we have set up a cell in head office which is assessing all greenfield, brownfield projects. We are also ensuring a quick turnaround time for all such proposals that are in the mid and the large corporate category. Likewise, for the RAM business, the RAM segment, there are CPCs, central processing cells, at each of our zonal offices for all the three verticals, the retail, the MSME and the agriculture segment loans are getting underwritten in the centralized cells. And although we have set up the 100% coverage is yet to be achieved, but bank is steadily expanding this coverage to ensure that our share of sanctions in the RAM segment from these centralized verticals go on improving as we go forward. So more and more branches are getting mapped to these centralized verticals for this purpose. Through the centralized processing, what we have seen, and we are able to maintain a standardized processing across the bank. We are able to also ensure a quick turnaround We are also able to improve our underwriting through better due diligence that happens in these centralized verticals vis-a-vis my general branch. Further, we have also a setup of specialized branches like my housing finance branches, my mid-corporate branches, my corporate finance branches. So to say about them, the specialized branches in the mid-corporate segment cater to proposals ranging from 25 to 100 crores, which typically are the MSME borrowers, whereas the corporate finance branches deals proposals of 100 crores and above. These centralized verticals, these focus branches I have talked about, have the required number of manpower and the required skill sets provided to them. And so they are ensuring for me better monitoring, improved turnaround time, and better customer experience for our mid and large corporate customers. Likewise, for the important task of recovery of our bad assets, so we have specialized recovery branches. The asset recovery branches, which are 13 in number, deal with NPAs ranging from 20 lakhs to 5 crores. So there is a clear SOP in place according to which if the account has slipped and if within some set time it is not upgraded, the account moves to the asset recovery branches, where we have again put specialized skill sets, law officers, which are effective tool, whatever effective tools for recovery, the steps for recovery are initiated without any delay. So likewise, we have the SAMB branches which take care of NPAs above 5 crores, and all the NCLT cases are dealt with by the SAMB branches. So out of our total NPA, around 70% of our bad assets are housed in these just 17 branches of the bank. So I'm able to give the required skill sets, manpower, legal expertise in these 17 branches, and that's how my recovery also, you would see that we are doing well in recovery. So the focus approach is giving me the desired result. So bank is well poised for growth in size and significance and move forward to become an important player in the industry. For this purpose, we are opening new branches to improve our presence across the country. Our current network has now reached to 46 zonal offices, 2,500 branches and 2,300 ATMs. And currently our BC network is low. We have 3,300 BCs, but we understand the importance of the BC channel, and so we are in process of putting in place, and by September 2024, this 3,300 will be ramped up to almost touching 10,000 BCs working for us. The bank is also implementing several digital initiatives such as the CRM platform and lifestyle banking application. This will enable personalized service to our customers across all channels. Launch of the AI-based video assistant will provide instant personalized assistance round the clock. Further, the launch of digital insurance platform and integration with online share trading platform will offer a one-stop solution to help customers manage their finances. Bank is implementing several straight-to-process journeys, STP journeys, such as the Maha GST scheme, digital vehicle loan, digital education loan, renewing the KCC loans, Kisan Tatkal loan, and so on. We are also shortly implementing the EBG module, which will help provide faster processing, and convenience will be there for the customer to do that part of banking anytime and anywhere. We will also have proper risk mitigation and better customer service cost reduction from the bank through this simple EBG module. So these measures will raise overall customer experience, make the interactions these customers have with our bank more efficient. Bank is also going to implement an end-to-end credit monitoring platform, which will enable to track credit performance across the entire life cycle of a loan, and thus strengthen my collection mechanism, and I will be able to monitor my assets more efficiently. As far as my capital is concerned, currently we feel we are well capitalized, but we shall raise capital as and when required and whenever the time is opportune for us to do that. This year 2024, we have a milestone. We will be celebrating our 90th foundation day of our bank on the 16th September. We will definitely keep some aspirational objectives for ourselves. So some newer products, some newer services, some newer initiatives will be all lined up for launch during this milestone when we touch 90 years. And what we feel that after displaying a good financial performance and that too consistently, we now aspire to become a bank of greater significance. But while we grow, we will remain mindful that growth in our top line should be commensurate with our bottom line growth. Recently, as a strategic move, bank has gone for creation of a new vertical, and we are calling it as the new business and customer acquisition vertical. This has been established with a view to increase customer engagement, deepening of existing relationships, and to acquire new businesses beyond the simple credit and deposit relationship that branches are typically known of. So this initiative will drive the bank into newer areas of payment and collection services that we can offer to our clients, channel finance, both dealer and vendor finance, payroll business and so on. This vertical, giving it the due importance, will be headed by a general manager rank executive at the corporate office, and there will be a support of 2 DGMs at the corporate office. They will have an extended arm in each of the zonal offices where there are business development officers already existing up to the level of chief manager. So we will align this structure is already decided, and this structure will start functioning very shortly. We also have a subsidiary which specializes in offering trusteeship services to both individual and corporate clients. Our analysis tells us that there is an inherent need for this product, and there shall be many takers from among the institutional and individual category of clients. So no other PSB or even any private bank currently offers this service. This is also one of the services that differentiates us from any other bank, and our newly created vertical, which I just spoke about, would reach out to all clients, corporates and individuals in the government sector, PSU or the private sector, and they will ensure a complete offering is made to our clients, and this we will create as a differentiation for the bank. So what we feel that it will help us to acquire more and more clients, to grow, improve the PPC, and also improve the customer stickiness with us. So when my vertical will approach for new business, so while we will improve the product per customer, we will also improve the profitability per customer, and we also will ensure a better customer retention with us. I am happy to inform that board has proposed to declare a dividend of 14%, which is higher than what we did for our shareholders in the previous year. Few parameters, I will just share my guidance, the main ones. So advances, we grew by 16%. We have a guidance of 16 to 20 for the FY24-25. Deposits, we grew 16%. We are keeping a guidance for ourselves 12 to 15. CASA, anything above 50% is the guidance we are keeping. For RAM, we are currently 61-39, RAM versus corporate, in the favor of RAM. So this will be maintained at 60-40, 1-2 basis point here there. And the NII is 27%. We are going to keep around 20%. NIM, we have already clocked 3.92, near to the 4% mark. But knowing the concerns around in the system, when the interest rate cycle may see a reversal in the second half, that's what is talked about. If that happens, so we are keeping a conservative guidance of 3.7 to 3.9. Cost to income, we already have achieved 38, less than 38. We will keep our cost to income below 40. ROA is already achieved at 1.5. My guidance for the next year would be 1.5 to 1.6. So GNPA, already we have come down below 2. We will maintain that level. We will remain below 2. NNPA between 0.2 to 0.25, and slippage ratio anything around 0.75 to 1%. My credit cost currently we achieved 1.07, we'll keep at 1%. PCR already achieved 98%, we will maintain around that level. CRAR 17.38 is my March number. I will be having a guidance of 16 to 17%. So these are the broad numbers. I understand you would have already gone through my detailed presentation and aware of what the various highlights, other than the highlights of the bank's performance. I think we'll take your questions. I have my EDs, my entire General Manager, battery of top executives are here in front of you. We will take your questions. Some part of it, if we are not able to immediately come back to you with data, we will definitely come back to you. So I think, Srivastav, you can.
Thank you, sir. Now I request that my analyst friends or investors they may ask the questions about the bank performance.
Sir, thanks for allowing me, and congratulations to you for a good set of numbers. Sir, you announced 7,500 crores of some fundraising. So can you elaborate when it's going to and how it's going to happen?
Okay. So yes, for the ensuing year and year next to that, we have a capital raise plan in mind. For one very simple reason, currently we stand at 86.46. That's the Government of India holding with us, and we would like to bring it down below the 75 mark, and so comply with the SEBI regulation of minimum public shareholding of 25. I am also aware that this kind of capital raise require that number that you just quoted, sir. May not be possible to be done definitely in one tranche, and may be requiring 2 to 3 tranches for us to comply with that guideline. And yes, the kind of growth objectives that we are keeping in mind, as I mentioned earlier, I am not in a pressing need to raise money for funding my credit growth immediately, but when we wish to maintain a CRAR of 16 to 17, that's the guidance. We will raise some money for our credit growth, for our growth, as well as to meet this criteria.
Yeah, I think.
Somebody should take care. 2-3 जने रहो वहाँ पे.
Yeah, 2-3 mic ले लीजिए, so that you don't the gap is not.
Yeah, please. Sir, Ramesh Bhojwani from Mehta and Vakil. Sir, your performance for this year has been outstanding. Not only for this year, over the past 4 years, it has been improving year on year, and it has. I believe it is at the absolute peak, ending FY24. Fortunately, the situation economically, business-wise, manufacturing as well as services, overall has been very good. But going forward, do you think and do you see any stress, any weakness in any segment of the economy or of the industry or business from your bank?
Okay, let me answer you in this manner. I think if you look at our country, the economy is poised for the next level. The international market and the world sees that the next decade belongs to India, is what the statements we read about. And I think when the economy progresses, when the economy flourishes, banks are the biggest gainer, or there's a direct relationship, directly proportional in terms of what the GDP growth is. I plan a thumb rule of twice growing my bank, twice the GDP growth.
Yes.
So, yes, there will be some headwinds in this when we look at the global position. The geopolitical tension is there, the oil crisis, because as a result of that, as an outcome of that. But, and yes, the Western world slowing down, the demands there. But at least domestic, we don't see those kind of challenges. And India definitely is poised for going to the next level. There are a lot of, I think, support systems working and newer initiatives from the Government of India. When we heard about that Viksit Bharat 2047, so there are 100 days, 3 years, 5 years agendas that are being chalked out, and all of those initiatives, there will be a lot of underlying initiatives under these broader objectives. So I don't see any major challenge. If now coming to my bank, my loan book, it's a healthy loan book. We are mindful that whatever 2014-15 era and how the banks have, entered into one sector, one segment, and how the experience has been and how we have come out. So not only us, every institutional lender is mindful of that, and how things also have changed, how these processes, systems, underwriting, those have changed, newer ways are there. So I think there is no challenge. Currently we are very, very sensitive about how the loan book we are building going forward. When we are thinking of becoming a bank of greater significance, I cannot think of building a loan book which is not a strong loan book. So we have, for that matter, rather made these underwriting norms more stringent for us to grow. So keeping certain benchmarks below which we don't go. There is no deviation in that. So our systems to monitor those accounts which are onboarded are also robust. Our collection mechanism is also, and a lot of technology is getting used in all these areas, whether underwriting, whether monitoring, and even recovery is getting digitized. Many banks are doing at various levels a lot of initiatives towards that. So I think if we are growing in such a manner, I don't see much challenges. Also, these are the good times. World over, you would see regulators nudging banks when the times are good to make extra provisions. And I think we lead somehow. We have some extra cushions, buffers, COVID provisions. So something more than what the regulator prescribes is what we have been doing. And I think those will be, these are the good times. The times are still continuing. And that is my family silver. I am not touching. I am only building on that. So that's the theme with which overall we are working. So I don't see, if this is the way we move, there should not be a challenge.
You have put a contingency quotient in your PCR of 98%.
Yeah.
It could have been you could have maintained it easily at 78 and 80%, but you have intentionally brought it to 98%. So that you have securitized your entire portfolio.
Yeah. Sir, actually if you see, very well said, you can build up to 70% or so.
Yeah.
But what happens now, let us analyze the capital conservation buffer is also there from the, Basel III norms.
Yeah.
Now there are various ways still that there is not a very big recommendations for that, but yes. So all the banks are putting up. But coming to the Bank of Maharashtra, if you see, so it is really a good gesture when you are covering that side. And apart from that, even 1200 crore you have put into. So what happens when the economy moves towards the IFRS or towards the Basel III, maybe the capital requirement or maybe the more better ones. So you need to keep a cushion in your, the treasury, so that you can anyway, without losing your strength, you can build upon that.
That is an excellent thing to preempt what is expected to come.
Very true, very true.
In the
because IFRS and both Basel III and ECL norms, if you are going to see in the future.
Yes.
So certainly, and Bank of Maharashtra being an analyst, you would have seen the bank has for many quarters has tried to build provision. Many times it has been asked as well.
Yes.
So we before, even for the wage revision and all, we kept almost 50 to 100 crore aside. So we keep that.
Sir, two more things. CMD sir referred to 14-15 onwards, the improvisation, improvement, innovative and inventive journey. Are we today at a stage in banking? Because if you are lending to a customer or to a client or to a borrower, the borrower doesn't take only money from one bank. He has 2 or 3 banks in a kind of a consortium. So wherever there is consortium lending, are the banks exchanging with each other the performance of that client? Like it may perform with one and default with 2. That was the thought we had when we were discussing banking management and banking procedures in the years of 14-15 onwards. So is today an improvisation or improvement of interaction between banks who are lending to the same borrower? Is it happening? Is it possible? Or going forward, is it on the agenda?
Sir, I can. Yeah, see, where today the data is so much available. Let me share with you. Certainly CICs are there.
Yeah.
And pertaining to your earlier question as well, you know, the regulations are becoming, I would not say stringent, better. So because, you know, when you do good, if you are in discipline, certainly you don't, meet up an accident.
Yeah.
That is point number 1. Now point number 2, when you asked about the consortium lending, I would say consortium is a far better, an arrangement where you are in continuous touch with each other.
Yeah.
Even the drawing power, which is, the told by the lead bank. But I would go beyond it, even at individual level. Now today there are 3 modes. The one is the credit platform. If it is a 5 crore and above, that is available to you any point of time. The second one is the CICs. There you have all the default, even the willful default and everything. The third, probably I am not very sure about, many of the people you will be knowing. There is an NESL, which is an IU, Information Utility Company. And there, even operational creditor data you are getting into, as well as the default, the first default. Now with these 3, now if you take the data aggregators which are in the market today, the one like, many players are there, you know very well.
Yeah.
Now you are in a position to know not even that. Even a customer, if they are losing a bigger debtor or a customer, maybe 30% to whom they are supplying.
Yeah.
So in a era when you have a data very well with you and you know where to use it, probably I believe that 2014-15 or whatsoever period you are saying, we are better placed today.
And that period will never come back again.
Yeah, and just to supplement what Ashish ji has just now told, lenders have also learned their lessons. Some of them have learned it hard way.
Yeah,
as far as their underwriting skills are concerned, as far as development of expertise are concerned. In our bank, for example, we have got industry-wise project appraisal cell we have got.
Wonderful.
And then there are guidelines from IBA for monitoring by way of ASM, that is Agency for Specialized Monitoring in High Value Accounts. So on the appraisal side as well as on the monitoring side, there is a lot more wisdom that has gone into the system. So those days are not going to come back.
Yes, they won't come back again, it's for sure. Thank you and all the best. Thank you.
Thank you.
Hi. Good evening, management. Myself, Abhijit Purohit. Firstly, congratulations on a really good set of numbers. I am from Kaviraj Securities. Just wanted to know the kind of run rate that we've achieved in this quarter and the previous quarters. What is the mode that we are going to focus on? Because from the commentary and from what it appears to be is that we are trying to put in a lot of effort to create a lot of competitive advantage and a lot of modes. So what is that one driving force or a couple of driving force that will help us sustain this run rate? Thank you.
So if you look at, I think you rightly said there cannot be one, there are combination of issues, combination of initiatives that is giving this kind of performance. So maybe when we talk of the business mix, asset side, liability side, when we talk of our processes, so how we are monitoring is happening, and also very important when we are growing, the compliance is part of it. Nowadays, regulator has no forbearance and there is no concessions, and sometimes we have seen that they are coming very hard on entities. So we are very mindful of that, that whatever is being done, whatever new initiative, business, they should be all seen compliant with what regulator expectation is going to be. And so coming to this broad theme that we have in mind, beyond this, see, what is helping us is actually the kind of branch expansion that we have gone into. Last 3 years, around 750 branches. Around 1800 was the level when we started the branch expansion mode. Today we are almost touching 2500 branches, and we have for the coming year also another 250 to 220 to 250 odd centers where we will identify and open branches. So this is helping me a lot. We are also monitoring that what is my expectation from this new branch. Our SOP is in place to see how we have identified this new branch, and once the branch is opened, how they are functioning, we are monitoring, and what is the minimum expectation. So we are seeing on an average in the various segments, RUSU, urban, metro, it's an average 30 crores of business that has got added by one single branch that is opened in a 1 year's time. So that gives us a good start, and then that should be continued. And yes, we still are going for new branch opening, so that also will allow me to be present in areas where there are a lot of banking activities, lot of maybe not only existing potential but growth potential is also lying. And still we have to country is having 700 odd districts, 700 plus. We haven't covered the entire area, so we feel that we can still go ahead and identify more. So for this year, as I said, we will be doing it, and all this will be adding to our growth.
Yeah. So, Abhijit ji, just to supplement, there are actually 4 pillars: people, process, technology, and data. So people-wise in our bank, AGM and above, with their the IDP, internal development plan, we have gone with the IIMs, XLRI, and ISBs. That is one part. And even at the very, very top level executives, almost 67 people are sent to various universities across the world. So I think, reskilling is very important when it comes to people. Second one is the process. So your bank, Bank of Maharashtra, is today having 35 RPA implemented, probably the first public sector bank to implemented RPA right now. So, and further 25 under development. So I think that is way the process you can think of redesigning. The third is the technology. Certainly we have given all the inputs in our analyst presentation. Now coming to the data, we need a clean data. So if you want to go for a big data or AI. So on that fourth front, we are having lot many projects running in the bank to have a data cleanliness and data shampooing and all those sort of things. We are also going to run a project on the data. So I think these 4 are the important pillars on which your bank is working upon.
Yeah, hi, I am Palak from Elara Securities. I had a few data keeping questions. Can you quantify the write-off pool, and how much would be of it would be NCLT?
Our NCLT is 8,500 crore. And in pool, we have around only 321 crores of NP.
No, I think the question is asking what is the amount we have written off, right?
Yeah, total pool.
Acha,
Written off in
written
pooled
off
assets or total?
Total, cumulative.
the current year we written off 1,600 crore.
And I want the total cumulative pool as on.
That is 19,555.
And how much recoveries are you expecting in this current year?
This financial, at least 1,500 we are expecting there.
Okay, all right. Thank you so much.
And whatever NCLT 8,000 plus, it is also written off account, technically written off.
Okay, thank
so
you.
Whatever recovery will come, it will directly go to your P&L account.
And see, if you talk about the IBCA cases, NCLT, we have seen there has been a delay in system, but there is a broad feeling that all these cases may be at whatever haircut, but would find resolution by 2025, because there is a lot of push and reviewing of the way NCLTs are functioning nowadays. So we may see resolution of most of the cases. So this 9,000, 8,500 odd NCLT portfolio where I have 100% provision and they have written off, maybe whatever haircut, but we can expect large part of it maybe next 2 years to come to the bank as a complete resolution, sorry.
Okay, thank you so much.
Mike, please.
Mike.
Yes, sir.
Sir, Sushil Choksi, Indus Equity. Sorry that I was a little late in coming. You may have answered some of my questions. Sir, you have done fantastically well over a number of years for CASA. And the future of Indian banks is dependent on CASA for many enablers. How are you seeing the roadmap of sustainable CASA over the next 3-5 years?
So yes, I think one of the strengths for us is the CASA share that we have to our command. Yes, there are certain relationships that patronize us, and we are mindful of that. We are taking care of these relationships. And what I just mentioned in my opening remark about the new initiative in terms of a new vertical that we have established. So the main task of this vertical is also to visit our top clients, both on the asset side and the liability side, and explore what is that other things that can be done for them. So typically, if it's a government department which maintains their operative accounts with us, I'm sure if we go and sit down and talk to them, they have some financial needs towards their, regular payments that flow from their their salary accounts, payroll to vendors. They also have some collection requirements. So that must be done by somebody else, or they may be struggling to meet those kind of requirements. So we will go as a complete bouquet of offering to these clients, which I enjoy a good CASA, and we will offer these products. We will do whatever customization in my CBS is required to help them, streamline things. And the advantage I look at it that I will deepen my relationship. I will also ring fence that business. Definitely under no circumstances it stays with me, because it's a competitive era. And maybe when we get other lines, other ancillary businesses from that one account, we will be adding to our incomes also. So CASA is one thing. We will definitely, whatever my current ratios, 48, 49 is my average, but I have kept a guidance to keep it above 50. So that will require a lot of challenge on me to see. So these existing relationships have to be ring fenced. Also, I will have to explore new areas. So that same vertical in a very structured manner is going to look at these. We will also identify and find out which are some areas for improvement. So from my SB, what is my salary share of business? Typically, we have data with us that what a private sector typically does, what is the best PSB that is there in that. So if my salary share is low, I will then put in place the required strategies to see that there they improve. So all put together, we will see that the CASA is maintained, the strength that we have, because through this we are able to give a lot of enablers. I can price my products very competitively, and I have good takers, and when I'm entering new markets, I can ensure that my branches are, on a very competitive field, they are able to scout business.
Sir, during my last visit, it was explained by Executive Director Ashish Pandey that we are enabling a lot of products whereby the current CASA holders will be able to sell multiple products. And if so, how many products are we able to sell or mine today from the data that he's your customer but taking a loan from some other bank, and you're able to convert because he is already giving you a CASA account but not taking a loan. So if we are selling 2 products, can we get to 3, 4? Do we have some data to speak up on that?
So very well said. I think this is a very important metric, and it's a measurable metric also, that in one custody, how many products we have sold. So we are mindful of that. We are seeing that what is my current PPC, and going forward, what is that PPC, say 1 year down the line, 6 months down the line, how much PPC we would wish to improve. We will take use of a lot of technology in helping us do it, and definitely we would like to do the other businesses with the same client, so we have a higher share of wallet share is what we are mindful, we are aware of that. We will work on those lines, that if this is the potential one client gives, then if I am taking part of it, I should get, why not I should get the whole. See, at some places we have a very distinct advantage. If it's a credit relationship, we are sole bankers, but we would find that for some of these things, some of the ancillary business, he's gone to some other bank. So where we have the sole relationships, I am sure we will be easily able to convert. But even in case where multiple banking is there or consortium is there, at least we will go with the ask that what is my share in the consortium, that much share in the ancillary business I must have. So with these kind of things and approach, I am sure when the efforts are made, we will get some value around this initiative.
Sir, to take all this initiative, digitization and digital expenditure is going to be a big thing. So you may be doing capex as well as on an operating basis. Last 2 years, you have given some numbers and guidance. What is the future outlook, and what kind of spend are we going to do in current year and maybe next 2-3 years on technology?
So every year we are seeing heightened budget towards the IT spending. This year it is 1200. I think I'll ask Ashish to just add to any more things that we can apply to, sir.
As you are aware, last 3 years budget on the IT and digital. So we were at 800, then 900, and this year we are 1000 plus. But at the same time, there are two important things. The one is, that the spend which you are doing, how it is getting into the conversion, into the business. So as we said earlier, that we are looking from starting with the 5% share coming from the alternate channels and increasing to 20% in say 2 to 3 years time. That is point number one. Second, we are also mindful that when you talk about the IT budget, so the thing is that the first is on the software side, the depreciation is 1/3 straight away. And on the hardware side, which is ATM and all, it is almost, say, 5 years. I'm just taking the ballpark duration. Now, with these two things, and now, certainly when we have given various press releases, like last 1.5 years, so that around 350 plus initiatives we have done and we have launched. So what happens that how it is getting into, that is why the digital business zone has been created in the bank. And further, as we have told, this last year, all the 3 data centers, one is the DC, near DR and DR, all those 3 are upgraded in the top class, which is the first grade. The second one is that there are 3 important switches. One is the EFT switch, another is the UPI, and third is the FI gateway, FI switch. So all the 3, the 2 are upgraded, now third one we are doing. So what I feel, that major of the things, the expenditures are made just to strengthen, the way in which economy is behaving towards the progress, in the same way as our MD sir has said, that the bank is also aspiring to progress in the same way. So these 3 years, certainly we are going to continue, and not only on the IT business side, but then yes, on the cyber security side also, in this pie, we are also sharing a lot, so that we strengthen a lot going forward in the cyber security as well.
So my last question is, you had very successful 2 QIPs because the performance was rewarding the shareholder who were bought. Today there's a lot of public noise that the government wants to reduce stake in some of the banks, and Bank of Maharashtra is one of the top performing among that. I don't see, it's a question and answer which I would seek, that you don't need capital at all. At the same time, you have to get to 75 as per the newspaper reports. I understand ministry might have not spoken, but the papers are speculating. Will you raise the equity further, or you will just be reluctant and ask government to sell in the market?
So the option number 1 that you give is one option which is actively under our consideration. In fact, we are going to shortly take our internal approvals we'll go to the board and get this idea approved and go to all stakeholders. I think RBI permission is already there, and from shareholders in the next AGM and DFS, we will be definitely doing this, and at the opportune time we will take a view on this. And yes, what you rightly said, there is no emergent pressing need on me, but the way we wish to grow our size, definitely, and also keep our CRAR of guidance of 15 to 16. So I require capital raise for both the objectives, to bring down my stake, government stake in Bank of Maharashtra, number one. Number two, even for my growth down the year, the next 3 to 4 quarters next year, I will want that I should raise money. And so I maintain this healthy CRAR, what currently we are seeing, or maybe around the guidance that we are having for us.
So what is likely effective tax rate for the years to come by?
Yeah. We have switched over to new regime where the tax rate is we have switched over to new regime where the tax rate is 25%. And if you talk about the financial result, the tax liability we have shown, it is we are not having any tax liability because of we are having carry forward losses of roughly 8,000 crore, which are giving us the benefit, even though there is a taxable income. Because of that carry forward losses, that actual tax liability is nil, and that benefit will accrue for another 1 or 2 years.
So next 2 years your tax liability will be negligible.
Yes.
Thank you for answering all my questions, and best wishes for the years to come.
Thank you.
Thank you.
In the last row.
डिजिटल बिजनेस बोला था आप भी कुछ होगा, जीएम कहाँ है आपने?
कबाड़ी साहब।
हाँ, कबाड़ी साहब,
1600 करोड़ के करीब हो गया हमारा डिजिटल बिजनेस के बारे में।
हाँ, anything you want to add, because lot of queries will come and you can add something. Yes, please.
Sir, in your assets column printout, there is a component. You have kept balances with banks and money at call and short notice. In FY23 it was 21 crore, but in FY24 it is 9150 crore.
Yeah. So in March month we were having excess fund which we have invested in SDR. That's why you are seeing the balance with bank is on higher side.
Okay. Thank you.
Hi sir, good afternoon, good evening everyone. So sir, my question was on yield
Sir,
on...
can you please introduce yourself?
Yeah,
At least I could not take one-to-one, but...
Yeah, sure. So my name is Prasad and I am from Wealth Brokers. So my question was on yield on advances. So we have been seeing, improvement in yield on advances. So if we take, it's given in the presentation. So from March of 22, it has risen all the way from 7% to 9.14%. So sir, can you give some granularity on what are the levers behind this improvement? And since we have seen the increase in RAM share, so that has been largely the driver, or there are some other factors, let's say maturity of branches that you were saying, or are there any more factors? And can we see, peaking of these rates post, interest rate cut announced by the government maybe in this year or the next year? So this is my first question.
So I think partly your question also has answer. Please sit down. So RAM is, yes, definitely a major contributor, and our share of 61, which was 57 last year, March 23, is definitely one component that has contributed in this. Also, our slippages are very much restricted, and maybe it's an outcome of the underwriting, the quality of underwriting, and our good monitoring on these accounts. So there are, if less slippages, I have the higher ability to earn interest and continue to earn interest. So anything else you want to add?
Yeah, actually slippages are as low as 1.24%, and in fact we have shed some of the low yielding advances. We are very much conscious about the bottom line when we are underwriting or when we are onboarding any credit customer. So these are the reasons, and NPAs across all the sectors, if you see in this presentation, across all the sectors you will find substantial reduction in NPA numbers. So these are the contributors.
And so my second question was on cost to income. So in your initial remarks, you were talking about, continue your geographical expansion. Even this year also, there were nearly 300 branches added. Despite that, we have seen, improvement in the cost to income ratio to 37, down to 37%. So this year in FY25, though you have given guidance of maintaining below 40% of cost to income ratio, do you see headroom further fall in?
We see digitization as a significant lever as far as curtailment of cost to income ratio is concerned. Ashish ji some time back told what type of ambitious plans we have as far as digitization is concerned. Right now our digital business is around 2,000 crores, slightly short of that. But going forward we are going to increase it at a rapid pace, and that is going to reduce our operational costs. And other than that, routine cost saving measures, reduction in routine expenses, use of LED lights, other cost curtailment measures, they are part of the culture, they are going to stay. So that's why we are confident that with growth in volumes, this ratio is going to be well below 40.
And if you see that the denominator effect,
yes.
So the cost, in absolute term cost is increasing, because when you are opening new branches, definitely that you have to incur the cost. But the benefit accruing from that cost, is higher side. That's why we are able to maintain our cost to income ratio, as rightly said by the Rohit sir and that Pandey sir, that digitalization, this is also we are getting benefit of that. For example, in reconciliation, lot of persons we employed in digital, that reconciliation, and once you digitalize the reconciliation, those person will be free, and that can be used for the productive purpose, maybe for engaging the business or marketing. So that will also add additional benefit to the bank.
Sure, sir. Thank you.
So actually, if you see some level of centralization, verticalization that we are doing also is helping us, because imagine a situation in a center, there are 20-25 branches, and each one of them has a credit officer to underwrite the RAM segment loans, versus we put a centralized processing cell and save a team of 4 to 5 officers. So actually, from every branch there is a credit officer who can be redeployed and used elsewhere. So this is kind of the redeployment through this centralization which has happened also is able to help us grow also, and not have that kind of impact we would have seen if every branch is doing everything. So that's how the centralization is also helping in many ways, including the cost part.
Yeah. Hello, sir. Sir, I'm Hatim from JM Mutual Fund. Sir, one question is, how much is the contingency and floating provision we are holding on the balance sheet?
We are not having any floating provision.
And contingency?
Yes, contingency provision that we have created. And as our MD sir told, that 1,200 crore COVID provision we are holding. And if you see that this year, first quarter we made a ECL provision 250 crore, and next quarter agriculture provision 325 crore, and the third quarter 100 crore provision for investment, and again for this quarter we have created 355 crore. So put together 1,080 crore provision we have created in the that profit and loss account. This is a type of contingency provision, you can say. So that, though this we have not factored while computing the CRAR and profit. Yes. So, sir, this is the exercise of strengthening the balance sheet, and balance sheet management will continue further also.
So second question is operating expense QQ, there is a very sharp increase. So what is the reason for that?
One of the reason is that because of that wage revision, our superannuation benefit cost has gone up in March quarter. So because of that, there is a increase in overall operating expenditure. Apart from staff expenditure, if you see that there is a reasonable increase in other operating expenditure.
Okay. So last question is that you have guided for a NIM compression going ahead. So wanted to understand a detailed response, because is it that more repricing of deposit is left, or we are shifting more towards lower yielding loans, or is it completely because of the decrease in interest rate which is likely to happen in S2? So yeah, your response on that.
So currently, it is rather to remain conservative, perform and showcase a better performance is our feeling. And yes, there are some headwinds for the system as a whole, not anything specific to our bank, but we are mindful of the fact that with tomorrow interest rate cycle is seen reversing, then how does it impact us? So we want to actually keep a conservative performance, come with you again, come to you with a better performance, and that I feel is the better way to do things. Not that we plan to scale down for any of the reasons that you stated.
I think it is in anticipation of macroeconomic dynamics rather than anything else. If the same macroeconomic factors continue, we are going to maintain this NIM and it may improve on it.
If there is no decrease in interest rates,
yeah, that's what.
Then
yeah,
there is a likelihood of maintaining NIMs.
Yeah, we may rather improve it.
Oh, okay. Thank you.
So if you see, we have given a wide band. It is 3.7 to 3.9 is the guidance, and we closed this year with 3.92. So that's one of the reasons such a wide band is there.
Thank you.
Yeah, hi sir. Sumer Choksi from Indus Equity Advisors. So first off, congratulations on another fantastic set of numbers. So just looking at your presentation, there's a particular slide on the external rating-wise split of advances to corporates. So just wanted some clarity on one aspect. Our number of AAA rated borrowers in FY23 in both absolute numbers and in outstanding exposure, so it's reduced from 26 to I think 11, and the exposures also come down from around 7,800 odd crores to 5,500 odd. So any particular rationale for this, or were we looking to lend on higher yields to lower rated say a AA kind of category more?
No, it has to do with the migration of rating, but broadly if you see the number of borrowers which are above investment rate,
yeah,
that ratio in the total portfolio, that is showing improving trend. So it may be either due to shift migration in rating from triple book to either upward or downward category, but I think the way to look at this slide is percentage of portfolio that is in or above investment rate. So the crux of the issue here is that triple B and above category, as on March 24, we are at 74%, and that is a significantly good number.
So broadly, could one take this takeaway that you would like to reorient or re-strategize towards a set of customers who can earn better yields for you, but still of a pretty good credit risk quality?
Yes. Yeah, that's right. Above investment grade, most of the, in fact, almost 3/4 of the borrowers. But at the same time, we are going to get significant yield. That's the issue. Right?
And so, if one were to see your AA category has shown quite healthy growth. So, just out of curiosity, these incremental advances in the AA side of things, are they to a certain sector, or it's more broad based?
No, it's all broad based. It's spread all across all the sectors.
Okay. And so, one last question. I mean, if we see, I think MD sir had also alluded to this, your orientation is shifted more from the corporate side towards the RAM side, and although corporate credit from high base will have grown pretty well. So how are we poised to grow for this year? I know MD sir alluded to the fact that the seeds of the NPA cycle are sown during the good times. So how are we viewing that from an FY25 perspective?
Focus is mainly on bottom line. So wherever we get bottom line and we are able to spread our risk, that's the area we prefer to. And with that logic, RAM is the ideal place to go. So corporates, we are not averse to lending to corporates, but we should get our significant yield on that portfolio. That's our criteria. And viability of the proposal, diversification of risk, these are the things we are looking for. There are sunrise sectors in corporate, for example, PLI related sectors. There are green finance related sectors are there. Then infrastructure is there. So wherever we get viability and we are in the sweet spot as far as ticket size is concerned and yield is concerned, we'll go there.
Okay. Thank you so much, sir, and best wishes.
And some of the so-called AAA sector where we are not getting the good returns, we have said also.
Yeah, that's right. Some of.
Actually, since beginning, 40 plus minus 1%, we are just sharing that it is, I think last 4 quarters we are sharing this information that around 40 plus minus 1.5% basis is our level of RAM and corporate.
Thank you, sir.
Just to add to that, I think we all are aware of, we all know of it, that the private sector capex cycle in big way still to come. So I think once that is happening, then automatically the demand from that sector is going to go up. And yes, we will always remain mindful of how the business that we are doing is going to impact the bottom line, and then take our call, keeping in mind the risk and the exposure and other things.
No more questions. Any questions? Any more questions? So friend, thanks you, and we require your presence also here also, as well as we will continue to interact with you, because you are the people, you tell us where we are going, and you are also the guiding factor. In number of times when we met you personally, you have also guided. So with this, I again thank you, all of you, for coming here, giving your precious time. Thanks.